Today we talked to Daniel Pelc, who is a financial and estate planner, and we touched on a few topics, how COVID has affected the stock market, what opportunities have arisen because of the COVID situation, as well as some real estate topics and how COVID has affected real estate. I apologize in advance. There might be a few bleeps, as well as I do have allergies, so a little bit stuffed up and sniffly. But hope you enjoy the content and look forward to talking to you again later. Well, we're here with Daniel Pelc. Maybe we will omit what we were just talking about. We'll leave that to Brandon DeLuca's discretion. But we're here with Daniel Pelc, financial advisor extraordinaire.
Oh, thank you.
Would you like to add to your title? Explain to us a little bit about yourself and what you do?
Sure. Well, thanks for having me on first and foremost. And I've been in the financial industry for about 10 years, just over 10 years in different facets. And what I currently do is I'm a certified financial planner. So work with clients of high net worth and really help them navigate through their wealth management needs. And that includes investment planning and tax and estate planning. So that's been my primary focus, and that's kind of what I do, right? So
you're dealing with, you said, estate planning.
Correct. Yeah. So a lot of our clients that come to us are people that have really built up a large nest egg in many different ways, and they're looking for avenues to save on tax now and in the future. We are in a generation right now where the baby boomers hold a lot of wealth, and they're really looking for creative ways to minimize their taxes now, and also finding ways to pass on the wealth to the next generation the most tax efficient way. So that's kind of what we do, and we use different solutions to do that, right? There's many different ways of doing that. So we really customize each client and really work with them and help them kind of tailor their needs to their specific situation.
Okay, and then you also dabble with, or you do like stocks and investing that way, right?
That's correct. Yeah, and part of that holistic financial plan is the investment aspect, right? So we invest the money now, and then we create whether it's trusts or various different strategies and vehicles. We put in place for them to really transfer that wealth to the next generation. But right now, with this current COVID situation, investments have definitely taken a top priority, given what's been happening in the markets, and we're really helping clients work through that and find opportunities in these downtimes.
Yeah, so like obviously it is a little bit of doom and gloom in some aspects of it, but obviously when there is a recession like this, it also opens up opportunity. So you're saying that you are. That's kind of what you're looking at right now with a lot of your clients, looking at buying more, getting back into it, or like how are you navigating through this COVID situation?
So it's definitely brought a lot of fear and emotion, and times like this, the market towards the end of March has definitely taken a massive downturn, and people obviously have various different. Everyone's different, right? So some people's risk tolerance is different than others. So some people are managing and dealing with it a lot better than others, right? So for us, in my job, and my team's job, is really to really kind of not focus on all the noise, but really just put things into perspective, right? So in the business that we operate, in the investment business, when things are low, that's when the greatest opportunity lies, right? And our job as advisors are to really convey that to our clients, And it can be difficult at times because when you're dealing with a health crisis right now, and there's a lot of uncertainty, and no one really knows what's going to happen. Our job is to really put things into perspective and say, things are on sale right now in the market, right? So let's really consider buying and getting into the market, and do that strongly, and not really have a short term vision, but really have more of a big picture perspective at this point.
Absolutely. So you are you're more of a financial planner. You're going to look at insurance. You're going to look at tax, savings. You're going to look at investing and growing your portfolio. You're looking at the full scope, correct?
That's correct. Yes.
Nice. So, um, I know one of the things you talked to me about that was quite interesting, that I haven't taken advantage of yet, um, but I'm gonna obviously at some point look into was through the corp, doing a whole life policy. Um, I know you touched on that a little bit with me about how it is beneficial, and what the tax benefits are, as well as growth benefits. You want to quickly explain that?
Yeah, absolutely. Insurance is actually one of the strategies that we use with a lot of our high net worth clients, and a lot of business owners that have corporations. One of the things that when people think about insurance, they really think about insurance sales, and that kind of old school mentality of the insurance salesman coming in the door and trying to sell you something you don't need, right? But when it really comes down to financial planning, insurance is actually life insurance in particular is an incredibly powerful planning tool, and there's so many benefits to it, and I'll talk to a couple of them, right? So one of them, is that you can hold investments within permanent insurance policies. One of which could be a whole life policy or universal life policy. There's different facets to permanent insurance, and you can actually hold investments within that grow tax deferred on a tax deferred way over many years. So it's a great benefit for many people that have capitalized and maximized their RSPs, their tax-free savings accounts, and are looking for alternative ways to really grow their money in a tax effective way.
Nice. And you were saying that obviously right now it's the market took a downturn. Um, we also saw like a huge growth over the last year or so, correct?
Yes, yes. The markets have had a tremendous run for since the 2008 2009 crash.
And like specifically over the last like year, 2 years, 3 years, um, I think we've seen like really big gains. Is that correct?
That is correct. Yeah, yeah. So any investors that have really stayed invested in the market, and took advantage of those really good years, have really benefited, and made some great returns. It's been great, and just like the markets do operate, there's different times in the markets that we have bull runs, and we have bear markets, right? And right now we're definitely experiencing a low markets, right?
And so for people that don't know, bear market is bad or good?
Bear market means bad, and bull market means good, right? So bull market when the market is trending upwards, and bear when the market's really hitting its recent lows. You can call it to be a bear market.
So another question I have is, because I don't do too much stocks, but you had quite a bit of a growth, um, and now obviously it's really kind of gone down. Has it, if say you invested 2 years ago, you know, and you had such a good upswing, are you down now? Like 6 months ago versus today, how big of a change is there? Is it as bad as it sounds, or is it like returning back to a level of like 2 years ago, or is it like no, it's an all time low?
Yeah. So we've definitely had a couple parts to that question. So we definitely had one of the lows in recently at the end of March that we've had for a very long time. So we've experienced that, but difficult to answer because everyone invests differently, and there's really two main components to investing: is the equity markets and the fixed income markets, right? So depending on someone's risk tolerance and how much risk they're taking in the markets, they're going to have a different allocation in those two areas, which really creates their overall investment. So if someone is heavily more invested in equities, then they would have definitely seen a much higher rate of return over the last 10 plus years since 2008, 2009. Now, someone that's been a little bit more conservative would have definitely seen some positive returns, but not as much as someone that would have been a little bit more aggressive. Now, another part of your question is really depending on what you do in times in good times and in bad times. So human emotion plays a huge part of investing, and that's a huge part of our role, is to really help investors really rationalize and make good decisions in both times, right? So just as an example of what I've been doing with my clients and what our team has been doing with their clients is that about 6-12 months ago, we wanted to respect the market cycle. So we wanted to respect that we were in a bull market. We were really trending upwards for a long period of time. And one thing I could tell you, being in this business for a decade now, is that no matter how good you are, no one can time the market. So no one's going to know when the markets are going to go up or down, right? So, but one thing we also know is that we can respect market cycles, right? So what I mean by that is that if the markets are trending upwards and we're towards the top of a bull market, well, that may lead to an opportunity to say, you know what, we don't know when something's going to happen, if it's going to happen, but maybe it's smart to rebalance your portfolio, take some of our winnings off the table, and really just sit back and see what happens in the next little while. And that's that's something that we were doing about 6-12 months with our clients. And some of those clients that really listened to that advice that we gave them really put themselves in an opportune position right now with the downturn, right? So now the market cycle is the reverse, right? The markets have taken a downturn. There's been some recovery over the last week and a bit, but all in all, it's been a great opportune time in the last 2 weeks to really put money into the market because one thing that I say is that if we believe that the world's going to continue, that business is going to get back to normality, and normality, I mean in the sense of growth, because it could come back in different facets, right? There could be some businesses that will have to adapt to some new norms. But if we believe that the economy is going to come back and the world's going to continue economically, then the only question we really have is time, which no one can predict, right? So for the clients that have the time horizon, for the clients that have the risk tolerance that can stomach maybe some more volatility in the short term, then they're in a great position of strength right now because they can really make some changes to their investments, their portfolio, and really sit back and just let the market do its thing, right? So
Yeah, I've watched a few videos and a few snippets of stuff that really speak to, and this I think counts for real estate as well. In these bear markets, a lot of investors, period, big or small, that's where you have great opportunity. And Warren Buffett's comment always kind of stuck with me, which was, when others are fearful, be hungry, and when others are hungry, be fearful. So I learned that lesson very well in the crypto market. I bought at the height of Bitcoin, me and all my friends. I think we bought at the $22,000 mark of Bitcoin. and pew, it went downhill quite quick. I think by the time we bought it to the time I got home, which was 6 hour period, I lost already like $6,000. So
Yeah.
it wasn't very good. But and if you look at it, everybody was like, you gotta buy Bitcoin. It was everybody was hungry for Bitcoin. It was even hard to get it at the time, and so it makes sense. When everybody's pushing that to all time highs, be cautious, and when it's low, get hungry. But yeah, it was a fun run learning crypto. Everything I feel in life is a lesson, and I also learned a lesson with the bull side of it. I invested in Tron at I think 1.1 cents, and I had like 300,000 shares of it, and then I literally couldn't sleep for like 3 days. Every time I like refreshed my screen, you'd see like I made $300, I made $500, I made $1,000, I made 2,000. Within 3 days, I made about 110 grand, and I was planning my island, my yacht. I was like, this is going to $2. I'm gonna be rich. Me and all my friends actually, we were planning everything, and all of a sudden, and the whole thing went down. So definitely, though, the experience and the lesson from it is that when you when everybody's hot to trot, be a little bit cautious, and when it's down is when you do have a time to make some money. So yeah, definitely always lessons to be learned. What?
Yeah, and to that point, I think there's a couple of important things here that people listening can take away from that is that it's the investing in being an investor is probably for any individual, and I can say that this with confidence, it's a loser's game, right? Because it's extremely difficult. Just even in the last couple of decades, there's companies that pour hundreds of millions and billions of dollars in technology to try to outperform the markets, right? And it's extremely difficult to do so, right? And I hear it all the time in my business that people will come and they say, what, I invested in this and it was going great and then I lost it. And I always tell people, if you're hearing about it in the media or you're hearing about it from a coworker or your family member or something, it's probably too late, right? Because that's why it's gaining its traction. That's why it's gaining its popularity, because it's been a hot, profitable stock, right? So that's one key thing to really consider, right? And I tell people, like, if you're going to invest, on your own, it really takes a lot of time and a lot of commitment to really analyze companies and really make proper decisions, and most importantly, identifying what your investor strategy is, right? Because a lot of people go into it just to buy something and hope that it goes up, but if it goes up, what's the exit strategy? Like, when do we get out, right? Like, so there's so many components to investing that it's not a get quick rich scheme, that's for sure. It's very, very difficult. And the other thing also, I'm just going to kind of piggyback on your experience, is that people try to pick one stock or two stocks, some of the hot things that are kind of out there and people are talking about. And the problem with that is that your risk is immense. Like, it's so large, right? Because if it does well, great, but if it doesn't do well, then you're losing all that money.
All your eggs are in one basket type thing.
Exactly. Yeah. So really the takeaways is that, either, number one, work with a professional that can really guide you and navigate you through these investment strategies through different times and periods of the market, because that's essentially what they do for a living. I always say, if I'm going to go if my car needs repairing, I'm going to go see a mechanic. If I'm sick, I'm going to go see a doctor, right? Everyone's got their respected professions. So I think it's important to really keep that in perspective and really, think about that, right? And the other thing is that, like you really need to have a proper asset allocation, know where you're investing, know your strategy, and really be disciplined, right? And Warren Buffett, you brought him up, and we obviously talk about him a lot in our industry, and obviously he's one of the greatest investors, if not the greatest investor in the history of the world. And it's one of those things where his philosophy is very simple. He will not invest in a company that he doesn't strongly know inside out, and strongly believe that it's going to be a profitable company for the long term. He doesn't day trade. He doesn't buy and sell on a regular basis. He really buys for the long haul, and I think that's something to really take away, right? So
Absolutely, and I think in our my profession as well, your profession, a lot of people, we live in the information age, so everybody has access to information. Everybody wants to try to do things themselves, and possibly thinks that maybe they save some money or what have you, but I really think that it's important to speak to a professional, somebody that eats, sleeps, and breathes this stuff, because there's little nuances that part of your job, like you said, is managing expectations, managing a plan, managing emotions. So there's a lot that if I just start buying stocks and all of a sudden I make a lot, I don't know, should I be selling it? Should I not be selling it? I lost a lot. Should I be selling it? Should I not? Like, you definitely want to speak to a professional, have a plan, and there's just so many little things that you've learned over your 10-year career that somebody just starting out won't know. And so I think it's like you said, right? If you're gonna, you said the mechanic, little metaphor there. If you're gonna fix your car, you're gonna go to the mechanic. You need your teeth done, you're gonna go to the dentist. So, if you need to get a financial plan in order, talk to a financial planner. So, definitely, I'd recommend that. A lot of people try to do it themselves, but I truly do believe it's important to have a plan, speak to a professional, and even if it's a free convo, to give you a shout and just have a preliminary chat. Correct?
absolutely, yeah, absolutely. Always a first consultation is free, just to see if there's any value that we can bring, because at the end of the day, it's got to be a two-way street. I think business as a whole in general is always got to be a two-way street. If I can add benefit, if my team can add benefit to that person, then and they feel comfortable working with us, then it makes a lot of sense. If not, then at the end of the day, it just doesn't make sense, right? So, but absolutely, any people that really are having a difficult time through this COVID-19, they want some kind of they have any questions that they really want to ask, and kind of have even a second opinion, they're more than happy to reach out, and there's absolutely no obligation, just sure kind of help at this point, and see where that goes, right?
Absolutely. And another thing, like, I guess two-part question: how much do you need to invest? Like, how much? What is the minimum to get into the market? And like, is there a lot of opportunity right now that you're seeing?
So, well, pretty much anyone can start with any sum of money, right? With myself and my team, we have a minimum of 250,000 that of investable assets that we ask clients to come in with. That is just surely because of our size and capacity and expertise, that we just unfortunately can't manage anything below that. But during these times, I'm more than happy to help anyone that has less than that, to kind of just give them the right guidance, right? And it starts from anyone that either just wants to start investing in the market on a monthly basis, on a regular basis. It's a great time to start that now, because you're buying into the markets at a lower cost, right? So it makes a lot of sense. Now, anyone else that has a larger portfolio, has retirement savings, it's definitely worthwhile to have a look at your strategy right now to see how you're invested, what your allocation is, and if it's appropriate for where we are right now in the market cycle, right? So, but anyone can start investing at any time, and I always tell people that from a financial planning standpoint as a whole, and these times are challenging for some people that are really being directly affected and are losing their jobs. But once things get better, the general thumb for a lot of people is that 10% of your earnings should really be going towards some kind of savings vehicle, and I think that's just a really good thing for people to really consider, because
And when we say savings, you mean more so investing, not just putting it in your piggy bank.
correct, yeah, and that's a great point, Peter, because a lot of people think savings, I'm just going to keep it in a high interest savings account, and that's savings. Investing is a huge part of that, because investing is kind of, you could look at it as your side business, right? You're really having money work for you while you sleep.
And that's how you get ahead.
And that's how you get ahead, right? Because with the proper strategy and investing, a bit at a time, or getting into the market, in the long term, if you do the basics correct, at least the basics, you're gonna do well over time, right? Because the market, the market history, the historical data just simply shows that if you're investing in the market in the long run, you're going to make money, right? It just the challenge with that is people buying and selling at the wrong times, right? But if you stay invested, you have the right allocation, then over time it's the right way to go. Because if you don't, and you just kind of pack your money into a high interest savings account that really yields you very little to no return, or you pack your money under your mattress, then the other thing that you're actually risking is inflation, right? You're actually eroding your money over time, so your money has to gain interest over the long term, so you can at least keep up with the cost of inflation and make some more on top of that.
Absolutely, and I think that especially for business owners, small business owners, sole proprietors who don't have pensions. We don't have retirement savings through a pension plan. It's really, really important to do what you're saying and put some money aside into some, stocks, investments, even the tax shelter, whole life policy you were speaking about earlier. And if anybody has any questions about it, obviously we'll add your contact later, so that if they do want, they can reach out to you. But I kind of echo the same sentiments in real estate. A lot of people, and I think it's from our parents' generation. A lot of our parents are immigrants. Mine, came from Italy. Yours, you were you born in Poland? Okay, but your parents were born there, correct?
Correct. Yes. Yeah.
So the mentality, and I'm broad sweeping statement. Definitely not everybody, but our parents' generation is a lot of times like save for a rainy day, pay your mortgage off, have as little debt as possible, which is good advice. But it's also something that I think that we need to change a little bit. So when I have a lot of buyers who are like, I got 200,000 and I want to buy a house, I'll talk them out of putting so much money down, because especially when you have interest rates at 2%, 2.5%, why do you want to have, I get the idea of having a lower mortgage payment, but if you can put less down and it's only costing you 2.5 points, but you can go make 7 or 8 points in the market, why not, do that? Do both. You still have a house and you're making money on your money versus it's sitting in your house, and you're only really saving 2.5% or 3% per se. So definitely, I think tweaking people's mindset to say, hey, you know what? Instead of putting, even like people that buy and sell, right? So you sell your house that you've made 400,000 on. Maybe you don't have a mortgage or you have a very little mortgage, and you're moving up to the next house. You don't need to put the full amount down. I want to change people's mindset from looking at their house as their house and change it to a savings account. And if we can change people's mind that way, I think they can make a lot more money, instead of everybody's happy to have their house paid off, and I get that. But if we tweak it to leverage your house, open up a HELOC, have which a HELOC is a home equity line of credit. So it allows you the flexibility, to utilize your money. So in a time like this, say you say, well, I don't want to invest right now, but I might want to. Okay, well, if you have your house, if you have a big HELOC, even if you wanted to put the full $200,000 down, okay, but have a HELOC attached to the mortgage. So in a time like this where Dan says, hey guys, there's a great opportunity, things are selling for 30-40% discounts, it's like, okay, let's dabble in and put 50K into the market, or 60K or whatever. So definitely would love to see people change their mindset and not be so scared of carrying. It's not good to carry debt if it's wasted debt, but it's a great thing to carry debt if you're using it to make money. If you're leveraging your worth to make more money, it's a great thing. So I'm sure you would agree.
And there's so much that came to mind there that you said that, because while you're talking there's so many things that from a planning side of things and just an investing side of things that kind of came to mind, and a couple of things I just want to kind of just reply to is that a lot of people, it's definitely a generational thing. I think that really influences things, because where our parents came from and how they were brought up is different than how we were brought up, right? So the mindset is different, and the other thing is that the economical times were different as well too, right? So some of our parents are used to paying interest rates of 10+%, right? Where we haven't been exposed to that, right? So that obviously plays with the mindset. But when it comes to planning, and one thing that I really try to explain to people is that it's never a stagnant thing, right? Like, things will change over time, and what makes sense today may not make sense tomorrow. But ultimately what it is that you're absolutely right. Like, with the current situations right now, if people, yes, or I want to say over definitely the last 5-7 years with the interest rates being so low, one of the things that, like you said, Peter, is why pay down your mortgage when you could take a percentage of that money and actually invest in the market and yield a higher return, right? So it's diversifying your portfolio, number one, and number two, it also gives you flexibility and options, right? Because when times like this come up, you're in a position of strength, because if you've done the right things, you can buy into the market and then really take advantage of the market, and it's one of those things where you just put yourself in a position of strength, right? And there's no real one solution and really mindset to have. It's really fluid, and it changes over time, and that's the benefit of working with someone that understands a lot of these facets and then understands the planning side of things. Because what if someone is taking monies and putting it into the market, and then interest rates are low, and they're doing that for now, but in a couple of years the interest rates go upwards. Well, what, maybe then it makes more sense to pay down your debts and really use that money that you invested, that you've gained some return, to pay down debts, because that's what makes sense at that time, right? So it's very fluid, and it changes over time, and like you said, it's you can't really have one mindset all the time, because the world's changing, economy's changing, and it's knowing how to work with money, right? And I think that's the biggest takeaway, right? Understanding money and knowing how to put yourself in a great position, right?
Yeah, and the flexibility of a HELOC per se, I think is something that you know we should highlight a little more. There's a lot of people that have line of credits right now that should really be thinking about that, thinking about maybe let's invest. If you don't, it's a great time to refinance. It's a great time to with interest rates so low to start thinking about these things. Hey, you know what? Maybe I wasn't ready, but you know the real estate market, for example, has also kind of mimicked the stock market over the last 10 years, especially in our area. Hamilton. I when I first got in the business, you could buy a house, in the north end of Hamilton for 70,000, and so and then we seen the GO train come and the spike in Toronto investors, which started with just Toronto investors, and then after a year or so, you started to see end users move in, and so we've seen over the last 10 years a huge spike in the real estate market, and so there's a lot of people that have a good chunk of equity in their home that bought 2 years ago, 3 years ago, 4 years ago, and what have you, and I think it's a great time for them to really sit and say, hey, you know what? Let me look at my financial situation. Let me look at the full package, and that's something that I'm doing right now with my team. We're reaching out to our clients that bought a year ago, 2 years ago, 4 years ago, and just opening the convo up of hey, this is how much you've made. This is where you stand equity wise. Maybe look at refinancing now and taking advantage of the lower interest rates. Even if you have to break the mortgage, it might be worth it. At least look at the numbers and crunch them and see, how much savings. Because if you think about it, for example, if you locked in at 3.49 and now you can get, 2.49, so save 1% and your mortgage is 500,000. Well, that's, $5,000 savings over the year, which is almost $500 a month. So you can save that chunk of money, and then also possibly say, hey, Daniel, is there something we can do where we're putting in like $500 a month into some sort of investment if that's what you want to do. So it's just give yourself the flexibility to utilize your money, your house, and leverage it to make more money.
Yeah, and you're absolutely right, and this is a perfect time for a lot of people to really. Everyone's got a different situation right now. Some people obviously have been impacted more than others, but it's a great opportunity for people to really, with time at home, with extra time at home, to really bring these matters to the forefront and really have a conversation, right? So, I've had a lot of calls from a lot of my clients and a lot of business owners too that are just saying, you know what, if it wasn't for the situation, I wouldn't be doing, a lot of the stuff that I've been pushing to the side for so many years, right? And it's one of those things where, at the very least, anyone that's listening, to really encourage them to say, you know what, let's take the time to really tackle some of those financial questions or financial things that we've been thinking about and talking about that we haven't really had time to act on, right? Because it is a very opportune time now, and I think over the next little while there's still time to really find opportunity and good opportunity that could really reshape and revamp long-term growth, right? So yeah, there's tremendous opportunity, and like you said, the HELOC, like the secured line of credit against your home, some people are looking into that as an option, right? Because I just want to bring up three points to that that are very valuable and why people are really considering it. Number one, it's interest rates are low, right? So it makes sense. Number two, if you're using money that you're borrowing to invest, you can deduct that against your taxes. So that's number two. And number three is that most Canadians haven't utilized or maximized their tax-free savings account. And if you invest in a tax-free savings account, any growth in that is tax-free, right? So there's really three major benefits to looking into that option, right? Now it's not gonna be suitable for everyone, right? But for the right person, it could be very attractive, and it's something that they want to consider, right? So
Absolutely. There's so many kind of, subtopics we can get into and highlight and tackle. But yeah, I think the biggest thing right now is, what we've been saying is this time where I feel like everything has slowed down, obviously, myself included. It was go, 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 go. And now all of a sudden it's like, okay, breathe. I have time to cook dinners. There's more time to think, plan. Uh, and if you take advantage of this slower time to start to tax plan, invest, financially plan, um, I think that it's very, very valuable to sit back and be able to do this. Even I'm going to have another buddy at some point speak about even looking at your wills. When you were talking earlier about estate planning, and I think a lot of people, especially our age, it's starting to come into your head. Like we're in our mid 30s, and it's something that when you're 25, you don't think much about these things. I know a lot of my friends have kids, you as well, and you start to think about these things. And if nothing else comes out of this COVID situation beneficially, then at least we should take advantage of the time that we have to will, estate plan, tax plan, financial plan, really kind of think about what you want and how we can achieve it. So it's a great time to reach out to yourself and get some more information about what they can do.
yeah. No, absolutely. You're absolutely right, and everything's part and parcel, right? So, as you mentioned, there's so many topics we could talk about and get into, but I wanted to kind of I'm very interested because I have I have real estate investments and that's part of my portfolio. That's and my allocation as a planner that I have is how has 2020 been for real estate? I understand that things started off well, but obviously with COVID-19, where are things now, and how do you see things kind of working out after this COVID-19?
So, you know, definitely frustrating. I'm sure everybody is during this time. It really kind of things started off hot. 2020 was a great start. Um, Market was trending very, very, very strongly. A lot of people, a lot of people think realtors love hot markets. Uh, Me personally, I like a balanced market, slow, steady growth. It doesn't make it so rushed and so it makes it like so stressful when it's a hot market. The listing comes up, you have to go see it that night, or it's gone tomorrow, or they're holding back offers for a week, and you're seeing 10 offers. Now you're offering more than you think it's even worth, and you don't even have the ability to put in conditions of inspection or financing because you're against 10 other people. And so when that happens, it really sucks because a first time buyer, especially who hasn't bought a house before, is being pushed to uncomfortable spots. So we were seeing that at the beginning of the year. January, February, March, it was really, January, February was really going hot. And we were, I had some record numbers. Even now we have a ton of listings, but it was going very, very well, and a lot of competition, not a lot of inventory. So it was a seller's market, and that was driving prices up. Um, Now, it has slowed down tremendously. We still have a lot of sellers hoping to take advantage of the SOAR that we got, but the buyers are not there in the same capacity. I think a lot of people are, waiting, playing the wait and see. A lot of people lost jobs, but that doesn't mean that the wheels aren't turning. Things are still turning, and there's always there is a positive. I think that we have like 13 listings right now, so there are a lot of sellers. And 2 weeks ago we sold two houses. This week we sold a house, one of our listings. So there is still buyers, and people will always need to buy and always need to sell. So speaking to the longevity of it all, I think that the market will rebound. Um, no matter what, we're always growing, and there's a limited amount of land. So you're always going to see it rebound, in my opinion. And, I think especially, I've said this for a few years. I think I've talked to you about it when a lot of people ask, like, can real estate keep climbing? Um, and we talked about it a few times. I personally think, Ontario specifically um, is poised to climb for a lot of years to come. When you look at it, and the biggest factors for me when I think about it is, number one, we're always in the top 5 countries to live in. So people always want to immigrate to Canada. Um, so that's always going to push like the number, for example, to throw a statistic out there, in last year, the highest growing city in North America was Toronto. I think it was somewhere around 87,000 residents moved to Toronto, and that's the GTA. So we added about 80,000 residents, and the next closest city of growth was actually Portland, Oregon, which was only like 20,000 new residents. So, that shows to me that there's a lot of strength in Ontario, and I think that we're poised to keep growing. So, people wanting to be here, always being in the top 5 countries ish to live in, and then globally speaking, we're actually quite affordable. I know for us, we think like, wow, Toronto's expensive, but I traveled to London, England, 2 years ago, and a 600 square foot flat was $2 million, 1.5, 2 million. You're looking at similar houses like similar to like a 2,300, 2,600 square feet could be anywhere from 10 to 25 million. So you and not just London, Shanghai, San Francisco, New York. You look at the global market of the big cities, and Toronto still is affordable in comparison. So I think that we're poised to continue to grow, and especially Stoney Creek, Beamsville, St. Catharines, Niagara. You have the GO train that has we've seen what the GO train did to Hamilton, and that's going to continue all the way down to Niagara. And I truly do believe that the growth will just continue. And a lot of people say to me, "Well, Pete, how who's going to take the GO train from Niagara to Toronto?" And my response is like, maybe nobody, but they will take it from Niagara to Burlington. They will take it from Niagara to Hamilton. And so, the GO train connects us all, same as the railroad. If you look at even back then when they were doing the railroad, anywhere they put a stop, that city boomed. And so it's the same with the GO train. To me, I feel like it's just going to interconnect all of Southern Ontario, and that's just good for business. So
It's interesting that you say that, because I think you're absolutely right. I think one of the benefits we have in Canada is that I truly believe no country is perfect, but I truly and strongly believe that we live in one of the greatest countries in the world, and with that, yes, we are one of the largest countries in the world, but land mass wise, but there's only a condensed areas in the country where it attracts people to live, right? Because obviously a lot of northern parts of Canada are not suitable for many people, that want to
Absolutely.
live and have the four seasons, right? So that I think works in great benefit to people that see real estate continuing to move upwards, because it just sheer numbers, right? The more people you have coming in, the space is limited, so that's obviously going to drive um, demand, and that's obviously where we've seen these prices kind of gradually over time grow, and another thing that I think we've talked about, or we've definitely mentioned before, is that the government regulations in terms of how they feel strongly about agriculture and opening up certain land masses, and their speed of that, right, is also, I think, um, is being kind of part of this whole expansion, is because they're not maybe doing it fast enough, and that's creating less supply, which the demand is obviously much greater, and that's driving the price upwards as well too, right? So but at the same time, they can only open those regulations up so much, because there's only so much land mass. So to your points, right, comparing it to other parts of the world, um, I still I also would agree with that. I think there's still a lot of room for us to kind of grow, right? So
Absolutely. And again, just to reiterate the 3 points, and you kind of touched on the land being one I kind of missed. So, yeah, it's like we're one of the fastest growing cities, or we are the fastest growing in 2018 city or 2019 city in the world, or in North America, sorry. And then, so growth, great place to live, still affordable globally, and number three, we have room to grow. So I do think that it is going to continue upward after this. Right now, like I said, you do have a lot of investors sitting on the fence, um, waiting to see if it does drop, if there is an opportunity to get something a little bit, maybe 10%, 15% discount. I don't foresee crazy discounts happening. I don't see it dropping too considerable right now, but I do think as soon as we have some sort of normalcy back into the with the restrictions of businesses and essential services, once that kind of lifts, I think you're going to see business as usual with regards to real estate.
so so Pete, one thing that I'm really curious about is to kind of backtrack a little bit. You said you've done um, a handful of transactions recently. Can you walk me through and walk us through kind of how those transactions took place in this COVID environment that we're living in?
Absolutely. So, just like this meeting, for example, is done on Zoom, and typically we'd be in person talking, and we've adapted to make this possible. We've also adapted in the real estate industry, which, some of the stuff I think will stay, and some of the stuff, will change. But like you said, everything is fluid. Everything is always changing, and you're always gonna grow, learn, adapt on the fly. So right now we're doing a lot more video, a lot more FaceTime interactions. Um, a lot of the showings are done virtually, and then if the client likes them, the virtual tour, then they'll book a showing. And the way we do that is, yesterday we had a showing, and gloves and masks were required. A COVID questionnaire is pretty much mandatory, to make sure that you aren't sick, you haven't traveled, nobody you know has had COVID symptoms, and once that questionnaire is done, we will allow the showing to happen, because people still need to sell and people still need to buy. So it is still essential, and we're just cautious about making sure, so a typical showing, the way I would do it now is I would arrive 5-10 minutes before the buyer arrives, the sellers will be gone already, or if they weren't able to, they would just step outside for the 20-minute tour. I would go in with my gloves and whatnot and turn all the lights on so the buyers can come in to an empty house, and I typically would follow them around the house and whatnot. But right now we're just kind of letting them in to do their own tour of the house. We've also our industry is quite quick, especially REMAX Escarpment. I'm proud to be a part of. They're quite quick at adapting and making things as professional and as easy as possible for us. So they instantly got together with lawyers and developed COVID clauses to assist with the legal side of it, because there might be a shutdown. So what happens in that event? If the registry office is closed, if lawyers are closed. So we have COVID questionnaires that help with the offer part of things. We're a lot more cautious. We do the masks and the gloves for the showings. We keep the social distance. And then going back to the showing, so after you're done your showing, buyers come out. I'll be outside. We keep 6 feet of distance apart, and we'll talk about the likes and dislikes of the house. And then going back to the COVID questionnaire, one of the clauses that it speaks to is that some people are buying it based on a virtual tour, and then in the clause it essentially says that the offer is conditional upon the buyer actually viewing the home once things once the regulations are kind of lifted and we're out of the danger zone.
Awesome. Now, one thing that I'm curious about is that now, do you think a lot of buyers, because you're saying that there's still obviously houses that are being listed and there's willing sellers out there. Now, maybe you can give us a percentage in terms of your opinion, but how much do you think that buyers are kind of just sitting back right now? Is it mainly because of the shock of COVID-19? Is it mainly because they feel that they're going to get a discount in the coming months or in the near future, or is it just what do you amount this kind of this change in the real estate market to?
So it definitely has buyer wise slowed down. January I think we did 12 deals. February we did about the same. And the second half of March, and from the second half of March to the middle of April here, I think we've done 2 or 3 transactions. So it's definitely slowed down. A lot of buyers. I had actually 3 deals die because of COVID. They were conditional on inspection and financing, and then as soon as the government announced lockdown, a lot of people said, "Whoa, what's going to happen? We're just going to wait and see." So you do have definitely a percentage of buyers that are saying, are things about to drop? Am I going to get a deal? And nobody really knows. Same as in your industry. It's like, you can make educated guesses as best you can, but you'll never know for sure where the bottom or the top is. So really just understanding your situation. What I say to buyers right now is, listen, if you wanted to buy or you need to buy, don't stop. Take a look. I always tell people that, even like if we're not in this situation, you're not sure you want to move in a month or 6 months or a year, that's fine. Let's talk about it. Let's plan. Let's start looking at inventory. And who knows when the right property will come up for you. Maybe it's in a week, maybe it's in 6 weeks, maybe it's in 6 months. So we'll still have that preliminary convo, go over the finances, go over your situation, go over your wants and desires, and then, start sending you inventory. And when you see something, you see it. The other thing I'm big on is, like, if it's your principal place of residence, $10,000, $20,000 on a 25-year mortgage is, you're talking $20 a month, $30 a month, $40 a month. It's not earth-shattering numbers. And so, you know, can you maybe get a $10,000-$15,000 deal in a month or two? Possibly. But are you going to pass up potentially the house of your dreams for $30-$40 a month? You know, is it worth it to you? Maybe for some people it is, but don't stop looking. Look for, because you might find the perfect house, and you know, because there's not so many buyers around right now, you might get a decent little deal on it. So, you know, and speaking to the price, because I know a lot of people are like, you know, I should get a discount right now because of X, you know, COVID. And the answer that I like to say is it's a transaction. It's not a store where, you know, the price is set and then it's up to, you know, them to lower it or high. At the end of the day, it's a transaction, and there's a buyer and a seller. And so, you know, we've done a few transactions with you. You're going to price it to what you want, and the only thing that's going to change your price is your desire. So if, you know, if you need to sell, okay, yes, you might be able to get some discounts on some properties right now. But if you don't need to sell, then you'll just wait it out. So is the market going to drop? You know, for some people, yes. And not because the market's dropping, but because the buyers, there's not as many buyers out there. And so therefore, if you need to sell it quick, well, you need to do your best to appeal to those buyers. And one of the strategies is lowering the price. It's not the only strategy. We also talk about, you know, improving the property, you know, or just time, right? You know, waiting it out. And so there's definitely different variables, but no, I don't think prices across the board are going to drop. You will see some, you know, news articles, I'm sure, with some, like, you know, the world is ending kind of data, but because even, like, you know, I think it was, so 2017 was our boom year, and in 2018 all the articles read like, you know, market down 25%, 20%, real estate, you know, blah, blah, blah. And when you look deeper into the article, it wasn't that prices dropped 25%, it was that sales dropped. But, you know, the average person sees the article and goes, oh, like the market's down 20%. Well, no, you know, prices actually stayed pretty strong and actually grew through 2018, 2019. But the amount of deals dropped. So, you know, you always want to be skeptical of what the headline is, and always really decipher and read through the fine print and see exactly what's happening. And to me, it's the same as this situation. I bet you're going to see like a lot of numbers saying like numbers way down, numbers way down. But when you really look at it, I don't think the actual prices are going to go way down. Just the amount of deals are going to go down.
And I think you're absolutely, you know, that's some great feedback, because, you know, looking at it from this, you know, I think our industries right now are very interconnected, because this isn't a financial crisis, this is a health crisis, right? So no one really knows how this is going to impact each respective industry, or all these industries as a whole, economically, how it's going to impact us as a whole, because it's a very unique time in history, right? So it's not like, you know, it's a financial crisis where it was self-inflicted, and there's ramifications of that, and we kind of, you know, have a better indication of how that could play out. But, you know, right now the biggest variable is time. No one really knows how long this is going to last. You know, when are we going to be back to, you know, normal, and you know, how that's going to look, right? But you know, some of the takeaways that I really took away from your comments is if you were in the market of buying, still look, right, and you don't have to necessarily pull the trigger now, but you can definitely still work with yourself and your team to really look around, and you may actually be back to kind of what you're saying before, you may actually have the benefits of those that you didn't have before when the market was really hot now you can really take time. You can really analyze your likes and dislikes of certain properties, and really, prepare yourself to make a purchase now or later on. And and like you said, if you really land on a home, on a property that is your ideal property, you have to ask yourself the question: am I going to risk not purchasing that dream home because I think the market is going to go down? Because again, just like both of our industries, right? No one can time the market. No one knows how we're going to end up when this is all said and done, right? So you could get a discount, but you could also lose your dream home if you don't make the right purchase at that time, or take advantage of that purchase at that time, right? So a lot of interesting things, right?
100%. The and again, I think it's same as I was saying with you. Like, great time right now when we have the time. Give Dan Pelc a call and ask you some questions. Knowledge is power. So just knowing the situation and being prepared to pull the trigger is so important. Same with real estate right now. If you're wanting to buy, actually get the ball rolling. Get your mortgage checked out, see what you're pre-approved for. Sit down with me, go over the numbers, see exactly what your goals and dreams are with real estate. And doesn't mean you have to pull the trigger. Just be prepared so that if the opportunity does come, or the property comes, you're prepared for it and you can pull the trigger if you want to. And it's the same for the sellers as well. Like, I have a lot of sellers saying, like, should I wait until this is over? Well, I don't have a crystal ball. I don't know if it's going to get worse or get better. But there is still buyers out there, so it is still and the interest rates are low right now. So it is still a good time to buy, and it still is a good time to sell. So, yes, there's less buyers and there's less activity because a lot of people are home, but definitely still a good time to buy. Definitely still a good time to sell. And most importantly, it's a good time to educate yourself and be prepared to pull the trigger on real estate or, stocks and investments and financial planning. Biggest thing we want to keep hammering home here is educate yourself, talk to a professional, and be prepared.
And this is the time that you really need it, right? You have, most people have the time now, and this is definitely a good time to reevaluate all that, because not only is it because you have the time, but also because it is an opportune time, or it could be a really opportune time to do it, right? So it's great. Before we end off, I wanted to ask, I know you've made some changes and some restructures to your team, and you've revamped and kind of restructured your team. So how is Muraca Group Real Estate going?
It's honestly when I first started in the industry, I didn't expect or plan to have a team. I've been blessed with a big network and doing a good amount of volume over the first 7 years of my career, 6 years of my career, and then I got some help with Chris Hayward, who is unbelievable real estate agent who really cares about his clients and kind of has the same morals as I do, and same outlook on business as I do, and it's all about the client and doing what's best for the client. But yeah, now we have 2 full-time admin. My wife, who is full-time helping out with the admin side of stuff, and more so than that, also the planning and the training, and so me and my wife, which in some cases it could be difficult, but with us we've really found a groove, and we do play off each other's strengths. So me, my wife, and then January we hired an admin, Pat, who has a lot of experience. I think like 15 years experience in the industry. So that's awesome. And we also hired another agent, Randy. And so we were really off to a hot start and really rolling. We're tweaking things to be able to service our clients better. And that is why I kind of made the team, is because, there's only so much I can do. and there's only so many buyers and sellers I can service. And the only way I'm going to be able to help more people is by having a bigger team. And so that's why I kind of created Muraca Group this year, is because I want to be able to service and help people better. It was becoming difficult where, I have 3 buyers wanting to see a house at the same time. I can only be in one place. So it's helped out tremendously. And the biggest thing for me is that, Randy, Pat, Chris, myself, and my wife all have very, very similar values. And we truly do care about our clients, and we do want to do what's best for them. And we're all positive and always looking to help. So definitely, it was a great start. It's been a little bit challenging over the last few weeks, but we're doing the best to stay positive. We're having our own little Zoom meetings and keep it on the same page and still pushing forward. And we're actually taking this time to reflect on some of the things we can do better. And so that's where, I was talking to you earlier about it's all about servicing our clients. And so right now we're looking at actually calling our database to educate them about how much money they've made since they bought their house, and what they can do with that. So maybe refinance, maybe take some of your equity out, maybe buy a rental property, maybe put some into talk to Dan and put some into the financial planning side of things, maybe a whole life policy. There's so many opportunities that people really need to start thinking about, and our goal is to educate as best we can. Any knowledge we have, we'd like to pass on, and it's up to people to do what their appetite is, and to delve in if they feel the need, or and we really strongly push it. We think that it's important at least to have the information, and now they can do whatever they think is best.
No, that's great, Peter. And we've obviously worked with your group, and I speak very highly of you and your team. And one of the things is sitting on the other side here, and being in a sales industry myself, I can definitely respect good sales professionals and some of the strengths that they have. And one of the things that definitely sticks out with you and your team is that you guys are very professional, but most importantly, I really like how authentic and honest you guys are, right? And that's I think that's one of the reasons why we've built a relationship over the years, and why we're doing this call is because I think we share the same morals when it comes to business, and that's really what it is. Like it's not about sales, it's about help, right? How many people can we get out there to help? And if we can help and we can provide value to that individual, then both parties win, right? But that's from a personal standpoint, and dealing with you and your team, that's one of the things that I've definitely highlighted. So I can definitely attest to that, and I congratulate you on the achievements and all the steps moving forwards. And I know sitting here, maybe in a couple of years, we're going to be talking about a team of 10 or 15.
I definitely appreciate the compliment, and I think the whole team definitely does as well. And to kind of touch on what you said, I think we do both have very similar mindsets, and that is why we're having this call. Is because we do care about our clients. We do want to educate them. We do want to put as much knowledge in their corner as we can. And I can say the same about you, as far as if you want to talk to somebody that's honest and just wants to give you as much information. Both of us, we're not, I don't really call myself a salesperson. Although we are, and that is our industry, I like to get away from the sales type idea, because we really do just help and facilitate and educate. And so definitely with you, I've been, I'm quite keen on talking to somebody who knows their stuff, and your stuff, and you're not a hard seller at all. You do what's best for the client, and you educate them with as much info as you can to allow them to make their own decisions. So definitely I attest to anybody, call Dan and definitely get as much info as you can from him. And if there's business to be made, then it'll happen. So awesome, man. I really appreciate you taking the time to speak to me and speak to the audience a little bit about COVID and the stock market and financial planning and whatnot. And look forward to having more chats with you down the road.
Appreciate it. Thanks so much for the time, and appreciate you having me on, and I look forward to chatting soon.
Cheers, buddy.
All right, take care.
Bye. So thanks again for tuning in, guys. Please like and share this segment. And if you have any further questions, we'd love to hear from you. Put questions in the comments below. Direct message me or Daniel. And we'd love to hear any input and any questions that you guys have so we can, get the information for you. And we will be having a bunch of other guests. So if, lawyer, mortgage broker, a bunch of other people to explain the situation and what's going on and to give you some guidance in this time. But any other people you'd like to hear from or any questions you have, again, please message me or put comments below and we'll be sure to get to them. Thanks again, guys.